That means is I'm not new to this. I've been doing this a long time, 12 years to be exact, for childcare professionals. So I'm excited to share with you all that I have learned over the last 12 years. And my goal tonight is that you will be ready so that you do not have to get ready for tax season. So are we ready? Yes. Now, I want to let y'all know before I get started, I feed off of your energy. So if you have your cameras off, feel free to turn your cameras on, because by nature, like many of you all, I'm an educator. A lot of people don't know that. And I'm able to tell if I'm speaking clearly, if I'm going too fast. I do that sometimes. But if I can see your eyes and I can see that you're hearing me and listening to me and everything is going well, then I know if I can pick it up, or I know if I need to slow it down, and I know if I need to repeat myself. Also, because I feed off of your energy, let me know if you're watching on Facebook, if you're watching on Zoom, if you're watching on YouTube. Feel free to like those comments up. Our team is standing by and we are picking up all of your questions. So I want to tell you what we're going to cover today. We have a lot to cover today. I'm going to do some introductions. Part of our team is here. We'll introduce ourselves to you. We're going to go over some housekeeping things, some general things that you must know that everyone must do. I want to go over some 2022 tax changes with you all. We'll talk about grants, employee retention, credit, and the tax effects that this is going to have on your business. We're also going to talk about your entity types. What type of business do you have, and what type of tax form does that require your business to file? Whether you're a home or a center, we have information for tax considerations where they affect you, and we'll talk about those. And I probably should have had this at the top, but documentation is paramount. So we will be talking about that and what you can do bookkeeping wise to make sure you have the documentation you need to support everything on your tax return. I'll run you through our process for tax preparation. And if at the end you decide you would like to work with us, I'll tell you what that will look like. And we'll also give you some tips and some help for moving forward. Last but definitely not least, this is my favorite part of the training. I'll take your questions. We have 15 unique questions. All the questions fit into about 15 different categories. I actually have all of those questions. So if you all that are live and in person have questions, make sure you're dropping your questions in the comment box and we'll be sure to hit them. So before I get into introducing myself, I want to introduce a few of our key team members that are here today. I got one of them over here.
Hello, everybody.
That is Karan. He's a man of a lot of words. Can't y'all tell? But that is Karan, Mr. Jones on the team. My better half, depending on which day it is, I call him that. Y'all already met Clatanya, but Clatanya, you want to tell the people who you are?
Hi, my name is Clatanya LeGrand. I am the accounting manager for Jones Taxes and Financial Services. Welcome.
And we have one more team member on here tonight.
Hello, my name is Kizzy. I'm the client service success manager for Jones Taxes and Financial Services.
Okay, so if you get a phone call from one of these people while working with us, know that a phone call from them is a phone call from me. Okay, I just wanted to make sure it's always nice to sometimes have an opportunity to put a face to a name. So now I guess I will act like my mama taught me some manners and tell you who I am. So my name is Shanita Jones, of course, and I am the mother of two young adult Brady children. I have a 24-year-old daughter who is a nurse, and I have a 17-year-old soccer fanatic for a son. I've been married to my best friend with all those words for the past 17 years. And since the pandemic, we have been working together full time every single day. I'm also the founder of Jones Taxes and Financial Services, where we help busy childcare owners build scalable, sellable businesses through the proactive use of tax and accounting strategies so that you can experience the financial freedom you need to educate, impact, and empower the world one child at a time. I'm also the founder of the Childcare Accounting and Business Academy. We call it CABA for short, where we equip, empower, and educate childcare business owners with the tools they need to be successful in their business. So Before we get started, I always like to take care of the legal stuff and give you a disclaimer. Please note that all of the opinions that you hear expressed in this training, those are my own opinions. Nothing that you hear or see in this presentation should be construed as tax advice or advice to your specific situation. If you like advice for your specific situation, you should contact your tax professional, or we are accepting new clients. You can hire us. At no time will we ever offer legal advice or legal services. For legal advice, you want to work with an attorney at law. And this slide is very important because I've been out here on Snapgram chat on the interweb, and I see some of the information that is being passed along. So before I even get into the presentation, this is actually not even part of the presentation. I want to remind you that when people are online and they're telling you information, there's always that part where at the end, if you like to implement this, if you like to, for example, hire your kids, contact their office. When people only give you a bit of the information and you go doing things and you think you're doing it right, it doesn't always come across the correct way, and that can often leave people in a lot of trouble. We do offer IRS representation services, but we really don't want you to end up in a position where you need representation. So whether it's us or whether it's someone else, make sure you're working with a qualified professional. So a lot of people ask me, how did you get into childcare accounting and tax? And how did you end up having one of the only firms in the country that specializes in childcare accounting and tax? And before we get started with all of the tax information, I really think it's important that I share this story with you so you'll see how this all fits together. Now, keep in mind, I'm on a timer as well, so I'm not going to waste a lot of words. There's lessons to be learned in this very short story I'm going to share with you. And I know that taxes, accounting, it can be boring, but it's my goal to make it as fun and as interactive and as valuable as I possibly can for you. So what made me decide to work with childcare business owners and become the childcare CPA, the real answer is that wasn't my choice. Rather, it was a calling that I humbly accepted. My aunt had a childcare business and she was my first teacher. I actually credit my ability to learn and to teach others from what she instilled within me at a very early age. So when I found out that my aunt had been working with a jackleg tax person who dropped the ball and left her and her friends in some serious trouble, I knew that I needed to help her because the work that she did was too important to leave it to chance. I just had one problem. I was a corporate accountant and I didn't know anything about childcare tax. So I searched my network and I looked for someone to help her, but I couldn't find anyone. So I stopped asking why me and I started answering why not me. And I began to learn everything I could to help my aunt resolve her issue and improve her overall financial situation so that she could not only get out of tax trouble, but had the quality of life that she envisioned and deserved. We were able to get her out of her tax situation, and she told a friend. A friend told a friend, and the next thing you know, I was known around my city, Philly at the time, as the daycare tax lady. So it turned out that many of the providers that reached out had all used the same professional as my aunt, and they all found themselves in similar situations. So I came to learn about a lot about the industry very quickly, and I also learned about the people in the industry because they actually carried the whole local economy in my area. So that was scary. My tax preparation business began to grow, but it didn't take long for me to discover that my help was needed a lot sooner than textile. They wouldn't have been in this trouble if they had someone that was there for them all year long. So childcare owners, they were paying way too much money in tax and they were unable to thrive because of it. Or in some cases, they weren't paying enough money in tax and they were unable to qualify for mortgages, loans, and ended up getting in trouble with the IRS. I knew that if these childcare owners went down, that they would take the entire community would be crippled, paralyzed because we wouldn't have quality care for our children so that we could go to work. So helping childcare owners with their accounting and taxes wasn't just about helping them with their accounting and taxes. It also enabled me to help the economy. But enough about me. Let's ensure that you are going to be ready so that you do not have to get ready for tax season. We ready for that? Hey, Nebraska. Hey, Virginia. Welcome, welcome. So, the housekeeping stuff that I told you that we were going to talk about. When you decide to work with us, the only way, I know the slide says the best way, just disregard that. The only way to communicate with us about your personal information is through your client portal. And I suggest you do not communicate with your other professionals about your sensitive information by any other means, especially not social media. All of your sensitive information should be transmitted through secure forms and portals. It's crazy out here, some of the things that we hear, and our insurance actually instructs us to put blockers up and just not accept it from people because we want to protect you. Another thing, we do not offer any tax training. We do not actually teach people to do their taxes, nor do we assist people that are doing it themselves. And for insurance and licensing purposes, we're only able to give specific advice or accounting or tax advice to engaged paying clients. And that's because it would be irresponsible to do otherwise. Everybody's situation is different. So in order to give you an exact answer about your specific situation, we would need to know more information. So we would have to have a relationship. The last thing I want to point out is we will not begin any accounting work until we have everything we need, including payment. This helps us to operate efficiently and accurately. So when you're working with us, you will be contacted for more information because everyone needs more information. So for 2020 and 2021, we are going to talk about 2022 taxes. However, it has been brought to my attention that a lot of folks have not yet filed their 2020 and 2021 taxes. And much of this, I believe, is because of all of the changes with the pandemic. We have a lot of people that are afraid that they're going to owe a lot of money because of grants. They need to do amendments because of ERC. And because they don't know what to do, they find themselves in a state of standstill and they aren't doing anything. That is not good. No judgment here, but you really want to get that done because those penalties and fines, they pile up very quickly and it's compounded. So for the people, you do not have to self-identify. They have not completed their 2020 and 2021 tax returns. You're considered a late filer. And here's what you need to know. For those 2 years, the IRS, if you have children that qualify for the child tax credit, the IRS would have given you payments throughout the year if you qualified. And if you got those payments, you would have received a letter from the IRS telling you exactly how much you filed, how much they gave you. And if you have a spouse, your spouse would receive one as well. In the beginning, spouses were both receiving the same amounts, but we learned later on in the tax season that the IRS changed that. So just because you received X amount of money, you cannot assume that your spouse received the same amount. And now we're talking about going back to 2020 and 2021. So it is very possible that you don't recall. If you file those tax returns and you do not include this information, and it should have been included, what will happen is you will receive a letter from the IRS and it will potentially cause them to look into more things in your situation. The second point I want to point out with the stimulus, if you receive the economic injury impact payment, EIP, or stimulus, if you receive those payments in 2021, it was $1,400. And in 2020, we had the $500 and the $1,200. Those pieces of information will need to be included on your tax return. The IRS would have sent you a letter for that as well. Unemployment. The only year that unemployment was excluded from income tax was in 2020. So if you received unemployment for any year other than 2020, that unemployment, those monies are taxable. Okay. Now, when things are taxable or not taxable, they're still reportable. So the IRS actually uses your tax return as a way to reconcile, to make sure the states are doing what they're supposed to be doing, to make sure that all of their checks and balances are in order. So just because you don't have to pay tax on something does not mean you do not have to report it. So you definitely should make sure you're sharing this information with your tax professional. So all those weren't very exciting things. Also, I want to add for the unemployment, there were some states that actually followed the IRS and did not make unemployment taxable. But then there were some other states that kept to their original rules and it is taxable. So that's another reason why you really want to make sure that your tax professional has all of the information. The last thing I want to add about those prior years for the people that have either not filed or they need to amend, and we'll talk about why we're seeing so many amendments very shortly. The child tax credit last year was much higher than it is this year. Not only was it higher, but it was refundable. So you probably have heard, if you've been online anywhere, you probably have heard a lot of people complaining that their refunds aren't as large as they were in previous years or that they owe more money. And that's because the IRS isn't giving as much credit for 2021. So this isn't really anything new. It just means that the IRS went back to what they originally did in the first place. Okay. The same thing with the 1099 issue that we've been hearing so much about. It's not a new, okay? It's just the same. IRS went back to what they were previously doing. Okay, so I want to make sure got that there. Okay, we're good to go. So now that was 2020 and 2021. Now I started getting into a little bit of things you need to know for 2022, but now I want to make sure that you understand some of the really specific things about 2022. Good news, the standard deduction is higher. When a standard deduction is higher, that generally means that you're being taxed on less of your income that you would have been taxed on otherwise. Every year, the standard deduction is index increased for inflation a little bit. So this year, if you are single or married filing separately, it went up by $400. And for 2022, the exact amount for single people is going to be $12,590. And for married people, it's going to be $25,900. Hit a household, folks, your standard deduction is going to be $19,400. Also want to point out that income tax brackets have changed. So taxes did not increase. The rates are the same, but more of your money is being taxed at lower rates. So that's another good thing. This could help offset some of the impact that you'll experience by not getting as much child tax credit or refundable child tax credit or advanced child tax credit as you may have gotten last year. And that was a nice thing. It was easy for people to get used to, but then they took it away. The child tax credit is going back to its original $2,000 for children under 17. And income thresholds are lower. So they're lower for the child independent care credit. That credit probably does not apply to many people on this call because that credit is the credit that families get for paying for childcare while they're working. But the income thresholds are actually lower now. Okay. And the credit is going to range between 20 to 35% of the amount paid. So when the parents are asking you for their daycare payments for the year, they're not actually getting dollar for dollar whatever they paid for childcare. They're not getting a credit in that amount. They're only going to get a percentage of that. So generally speaking, the more you make, the less you're going to qualify to receive in credit this year. So most people, if you have a child care and you have a child, you probably are sending your child to your own child care, not charging yourself. But for those that may send their children to other places, you may find that information useful. So before 2022, if you made $125,000 a year, and when we talk about how much you're making a year, we're actually talking about how much is taxable. So you could have made $1 million, but only 125,000 of it is taxable. I would want to talk about why that's the case, but it could work that way. So before 2022, you would be phased out at 125,000. But now if you qualify, you can actually make up to 150,000. So more people will be able to qualify, but the credit is not refundable anymore. And only people that make $15,000 or less will get that full 35% of whatever they paid. But we know most people that make $15,000 or less are usually having their child care costs subsidized anyway. I want to talk about earned income credit. Earned income credit was increased in 2021 for taxpayers that don't have children. You only qualify for earned income credit if your income is low enough to qualify. So most people do not qualify for earned income credit without children. So it was actually increased to $1,521 in 2021 because of COVID. But in 2022, they took it on down to $560. And that's for single people, no kids, no spouses, that made up to $16,480. Charitable deductions, this one will probably affect a lot of people on this call. And don't worry, the rest of the slides, I will not be reading tax rules, but this is important stuff that people commonly miss out on understanding. When you go to get your taxes done and the numbers don't look the same year over year, you're thinking that the person made a mistake or they don't know your situation. No, the person isn't informing you often why the changes happen, because people take for granted that because it's all over the news that you actually are paying attention and it is actually resonating with you. So the charitable deduction changes are going to probably affect a lot of people on this call. And this change didn't really have a huge impact, but in 2021, we were allowed to deduct $300 above the line. So that meant if you didn't qualify to itemize your deductions, but you still gave money, you still could get credit for deducting $300. In 2022, the government has taken that away. Stop, dog. So that means that in order to deduct charitable contributions, you would have to do it on your Schedule A with any other itemized deductions. So if you don't qualify to itemize, you're not going to get any deduction for your charitable giving. That's your giving to churches. That's your giving to other religious institutions, 501c3 organizations. And while we're talking about this charity, childcare business owners are some of the most charitable folks I know. But while we're talking about charity, remember, if you're helping a needy family, that is not charity. If you're buying things for, oh, I got a misspelling there. But if you're helping a needy family, that is not charity if they are not an actual 501c3 organization, okay? That's just you giving from the kindness of your heart. Not my rule, the IRS rule. So now we're going to talk about some of these grants. We're going to talk about the employee retention tax credit and the tax effect that it's going to have on your business. So I want y'all to listen real closely to what I'm about to tell you about these grants. By default, grants are taxable at the federal level always, unless it is explicitly otherwise stated. When the government and the SBA, when they gave out the EIDL loan and the EIDL grant, the reason it was such a big deal that they were giving that money out and it wasn't taxable is because it usually would have been taxable, not the loans, but when they were giving out the grant portion of it. Remember, first it was $1,000 an employee, then it was $10,000 for everybody. It was like raining money when the SBA was making it rain. Then it was up to $10,000. Everybody got $10,000. But the reason why everyone was so excited about this grant money is because the government did not require us to pay tax on it. We did have to report it, but we didn't have to pay tax on it. And I want you to know that all of these stabilization grants and everything else that you're receiving, they are all taxable at a federal level unless the government says otherwise. And they may or may not be taxable at your state level, depending on your state. So I'll give you an example. The state of Louisiana, great food and great rules where this is concerned. They're very kind of child care providers, actually. Louisiana and Texas are. So in the state of Louisiana, Louisiana decided not to tax the stabilization grants, the ARPA funds that they received. But other states did not. The states have the ability to make their own decisions. So if you're talking to a child care provider in New York and you're talking to someone in Alabama, they may have very different situations depending on what their state has decided. Now we're going to talk about entity. What are your business entities for those of you who are watching? Facebook, what are your business entities? Are you a sole proprietorship? I want to know in the comments so I know where we're going to spend most of our efforts tonight. Are you a partnership? Are you an S corporation? Are you a C corporation? Is your business a nonprofit? I see a lot of S corps in the house. S corps, are y'all on payroll? Look, now I'm the S corp payroll police. All right. And feel free to continue to post your questions. Okay. So this isn't the payroll police conversation today. So sole proprietorships. A sole proprietorship is someone who opened their doors and decided, I'm going into business. You may or may not have a DBA. You may or may not have an LLC. If you're a sole proprietor, your taxes get filed on your 1040 form. It's just a separate form that's called profit and loss from business. So if you are a sole proprietorship, that means you cannot do your business taxes separate from your personal taxes. I'll be honest, we make a lot of money every year because people have gone out and filed their personal returns, and then they came back and said, Shanita, can you do my business return? Well, yeah, but your business is your personal because you are, this ain't my word. The IRS considers you to be a disregarded entity. Okay. So if you're a sole proprietorship, you are to file on a 1040 Schedule C. And I want all of the sole proprietorships to understand this. When you go and talk to bankers, when you talk to lenders, when you talk to tax professionals, accounting professionals, I want you to know what you are and be able to state it affirmatively so that people know that you know your stuff. Okay. Told you I want to educate, empower, and impact. And I don't want any sole proprietor leaving off of this call tonight thinking that they can file their business return separate from their personal. If you've been doing that and you did that, possibly even for 2022, you need to file an amendment so that business information can be included with your personal. If you have an LLC, where my LLC people at today? I see Sister Lee on Facebook. She has an LLC. Where's my LLC people at? Where y'all at? Where y'all at, LLC people? I first of all want to say that I am so proud of y'all because when I asked y'all what is y'all entity, we did not get a lot of people tell me LLC. So I want to ask my LLC people, I'm going to cash app you. I will cash app you $100 if you can tell me the federal form number for the federal LLC tax return. Can anybody find it? I want to see the federal form for a federal LLC. If you can show me that, I will cash app you. And y'all know how I feel about cash app. So I'll give it to you out of my own money. Okay. The reason why, oh, she said a 1049. I don't even know what a 1049 is. 8832. Those are real forms. 8832 is a real form. But oh, y'all know some form numbers tonight. 1099. By the way, your 1099s were due today, and you cannot file an extension for 1099s. We got that question earlier. That was a pretty interesting one. So 1099s are due today. You can still file them late. We do provide that service for people as well if you need it. So the reason why I can offer you all $100 without worry is because it doesn't exist. The federal government does not recognize your LLC. If you are an LLC and you're one owner, you're either going to be a sole proprietorship, a partnership, or maybe your business has elected to be taxed as an S corporation or a C corporation. So if you are an LLC, the IRS does not have an IRS tax form for an LLC. So when you talk to your tax person or any other person really, and they ask what's your business tax entity, your tax structure, it is not an LLC. Your tax structure, one person, by default, you're a sole proprietorship, unless you make an election to be taxed as a S corp or a C corp. If you're two people or more, then by default, you're going to file a 1065 as a partnership. If you elect to be an S corporation, you're going to file an 1120S like she needed. And if you're a C corporation, you'll file an 1120. My slide actually they copy pasted it wrong. But if you're a C Corp, you're going to file an 1120. I'm actually type that. C Corp is 1120. Okay. And if your business, your organization rather, is a nonprofit, you're either going to file one of the 990 forms. The postcard is for nonprofits that do not have collections of receipts of $50,000 or more in a year, and you can do that yourself on the IRS website if you qualify to file a postcard. Another note I want to give y'all about these nonprofits we be out here starting. You must file your nonprofit even if you didn't have any activity, or you stand the risk of having your nonprofit status taken away from you. And then by default, that organization will convert to a C Corp and you'll be taxed at the C Corp rate. So I want to make sure everyone knows. I wish I knew how to change the slide while I was showing it to y'all, but I promise you, if I try to do it, I will probably break it. But that's important enough for me to figure it out because I don't want to have it up here and be telling y'all the wrong thing. But C Corps is 1120. So don't forget that. I want to make sure you understand that. So everyone knows what their tax structure, their tax status is. If you do not know what your entity tax structure is, let me tell you how you find out. You go get your last year's tax return. That's your first point, but it is not your only point. You also pull out your IRS EIN letter. If you are anything except for sole proprietorship, in the center of that EIN letter, it will say 1065, 1120S, 1120. It will say another form series, okay? So you need to know. And then last but not least, you can actually call the IRS, give them your EIN, and you can confirm it with the IRS. We do get a lot of business owners that do not know which form their businesses are supposed to file. You cannot become an S Corp just because you decided you were going to be an S Corp that day. That's not how it works. The IRS actually will send you a letter giving you, they say, congratulations, you now qualify to be an S Corp. And they tell you what date is effective as. And that's very important because the taxation for S corporations is very different than the taxations for any of the other entities that exist. So we good. All righty. Move right along. I want to talk about homes versus centers. So, are you in a home or are you in a center? Who is on the line today? So we have some homes, and then for our centers, are we multi-centers? How many locations do we have? So, one thing I want y'all to be mindful of with these homes and with these centers and with these multi-locations, when we talk about a business for accountants is considered by the number of EINs you have. So if you are a center and you have 5 locations, you still have one business. And that's very important because it tells us what tax return or returns need to be filed. But regardless of whether you're a home or a center, you want to make sure you have your EIN. If you're going to a new tax person and your new tax person does not have your EIN letter, you want to make sure you give it to them. If you became an S Corp or a C Corp and it was in between tax filings, you want to make sure your tax professional has that because that form has important information on there, including the effective date. And the IRS needs to be able to match that to their system. So y'all want to talk about some deductions? I see we have, we're about even. Okay. Y'all want to talk about some deductions now? Is that good? So before I talk about deductions, I want to tell you what a deduction is. We get a lot of questions. Can I write this off? Is that a write-off? Can we deduct this? Let me explain what a deduction is. A deduction does not offset how much money you owe in tax. A deduction deducts, subtracts, reduces how much of your total income you are going to pay tax on, okay? So let's say, now I'm going to make fairy believe numbers. Let's say you are in a 20% tax bracket and you go out and you spend $100. Who knows how much of a deduction you were going to get? How is that going to impact your tax rate rather? If I'm in a 20% tax bracket and I spend $100 on a business expense, do you know how much that is actually going to change your tax life? What dollar amount? Marlon says that they'll pay $100 less. What do you all think? Is Marlon right? Ms. Rivera says $20. Jennifer says $80. Julie says reduced by 20. The correct answer is $20. When you look at whatever your effective tax rate is, and I'm not even going to get into teaching you what a marginal and effective tax rate is, but when you look at what your effective tax rate is, or your marginal tax rate, if you're at a 20% tax bracket and you spend $100, you're only going to save $20 in tax. So your deductions do not reduce your taxes dollar for dollar, okay? Credits do. Credits actually are credits against the amount of taxes you earn. Credits are actually credits against the amount of tax you owe. Okay. So in that same example, if I get a $100 credit and I owe $500 on my taxes, now I owe $400. $500 that I owe minus my $100 credit, it leaves me owing $400. Okay. So deductions are not dollar for dollar, credits are. And then when we get into credits, some credits are refundable, meaning that if your credit eats up all of the tax that you owe, you get to get the rest left over. That's what changed with the child tax credit last year. Before it was like we just go up to zero you out and that's it. But now we'll give you the rest. But now the government is like, no, we're not refunding these people for these credits. How do you get credits? You get credits for things that you qualify for. And things that we qualify for credits, it could be earned income credit if you qualify for that. And the other credits are things that you really have to have looked at by your tax professional. Everyone doesn't qualify for credits. Okay. So it really all depends on your situation. And you don't want to run out and do things. Some people will run out and do things just to get credits. Or deductions. One of the saddest things that people run out and do is they run out and spend a whole lot of money to save money in taxes. But I just showed you in my example above, if you're in the 20% tax bracket, and let's say you owe $1,000 and you spend $1,000, you're only going to save $200 in taxes. So you're still going to pay the $800, and you're still going to be out of you're just going to be out of $1,000. You know what I mean? So I want to make sure that we're all understanding this and that we're not making decisions based on tax. So this is where people normally say, well, darn, Shanita, what can I do to actually save money in taxes then? I had a lady come to me and she was advised to go buy 4 new vehicles to save money in tax. Guess how many vehicles she needed? She didn't need any more vehicles for her business, but she was given very poor advice to save money in taxes. Now, she didn't owe any money in taxes, but she was still left with 4 vehicles she didn't need and cash that she could have used in her business, cash she could have put towards her retirement, cash she could have used to go on vacation. So you want to make sure you're getting qualified advice by qualified people and that you're not making all of your decisions based strictly on saving money in taxes. If you do need to save money on taxes, we do offer tax planning services where at least if you have a cash outflow today, it's going to be to invest in some form of income generating or wealth building vehicle that's going to benefit you in the future for years to come. So make sure we're not getting advice from, watching things on the internet and taking what we see. Even if we Google, if you don't study the tax code and you don't understand how to interpret the tax code, it can be very misleading. A lot of our clients are they're like doctors and and they have master's degrees, very intelligent people, but this isn't their discipline. This isn't what they're educated in. So sometimes things go all the way left. And sometimes if you go too far left, is very difficult to undo some of the things that are done. So back to these deductions, the homes versus the centers. In homes, you have a time-space ratio, of course. That's where you get to write off the amount of your home you're using for business. Now, a lot of childcare providers use their entire home for their business. So it goes by your hours. And then if you're using certain spaces in your home for storage, you don't have to use that space 100% of the time if you're storing things there. And you get to write off a portion of your utilities. That includes your electric, your gas, your sewer bill, your cable. Don't forget those HOA fees. All of these, everything that it takes to make your house run, because you can't have your business in your home if you don't pay these things. But it's not necessarily 100%. It's the percentage of your business use. That's why your tax person is asking you, how big is your house? How big is the room you use for daycare? How much of the home do you use exclusively only for the daycare? How much is mixed use? These things are very important. How many hours a day are you open? How many days a year are you open? Don't forego these questions, because if you just say, for instance, oh, well, 8 hours a day times 5 days a week, 40 hours a week, but you had to clean up that morning, and you had to clean up when the children leave, and you had to set up and you had to prepare lesson plans, you're shorting yourself. So don't short yourself by not taking the time to actually think it out, talk it out, and give complete answers. Because I'm going to tell you, I coach accountants also. These people are not going to chase you down to make sure you get your money. Okay? Now, on the centers, for homes, let me stick with the homes for a minute. Don't forget, if you have renters insurance, if you have homeowners insurance, all of these things can be included in that time space ratio to calculate your deductions. But it's going to be a percentage. I'm not saying 100%. If you're in a center, you get to deduct all of the utilities and all of the rent. If you're in a home, you get to deduct that portion of the rent if you're renting. I did not say mortgage. We'll talk about mortgage on another slide, but I'm talking about rent. So for homes, you also need to make sure that cash, and in our centers too, just because they didn't give you a 1099 or W-2, it is still reported. A lot of the trainings that I go on from my continuing education, when they talk about audits, they always like to use the little daycare lady in their examples. And it angers me because all of my colleagues know that y'all are my people. And so, Shanita, get your people, get your girls. And they always say this to me, but that's because the childcare industry is one of the most highly audited industries because it's a cash business, just like hair salons and barbershops. So you want to make sure you're reporting your cash. When you're not reporting your cash, the government, when you put your EIN number in, there's something called a NAICS code, NAICS. And what they do is they compare. Now, they don't tell us how these algorithms work, but they compare your business to businesses just like your business with that NAICS code. And they look to see how much cash are they reporting, how much 1099s are they reporting, how much expenses are they reporting. And then their system goes in, and anything that breaks the norm, that doesn't make sense, that's how you get pulled. So you can get pulled for an audit. Your tax person doesn't have to make a mistake. They don't have to leave something off. You can just be randomly pulled in a lottery. And if they catch this, it's bad, because then they calculate it based on what they think it would have been. And they have the right to do that under the tax code. So you want to make sure when you're having your taxes done that you have all of your 1099s. Someone asked earlier, why do we wait so late in the month of January to hold this training? The reason why we wait so late in the month to have this training is because we want people to have an opportunity to get all of their documents. If your business is an S corporation or a C corporation, you may not receive 1099s. 1099s are not required to be issued to S corporations and C corporations. You want to make sure you have all of your payroll information. That's your W-3s, your state UC. I'm talking about unemployment. How much unemployment tax are you paying as an employer? Your W-3s only tell the federal story. When we're asking for your W-3s, except for our monthly clients, we pull those ourselves for our accounting clients. But when we're asking for your W-3s, we want to make sure we are actually deducting everything you're entitled to. Okay? And that state unemployment, don't forget your workers' comp. So many people pay these workers' comp premiums and other business insurance premiums outside of their business for some reason. Like their agent will just put it all on this magical policy. and then it gets left off on the tax return. So sometimes when we're asking you questions and you're like, I gave you everything, we're asking because we don't believe you gave us everything. And we're trying to do the best job for you that we can. So help your professional to help you, and don't get frustrated when they're asking you questions to do a good job for you. Your 1096s, if you have 1099 independent contractors, we need the 1096 because the 1096 is a sum, addition, add up of all of your 1099s. And as I stated earlier, 1099s were due to be filed today. If you still need to file 1099s, there is a service that we can do for you. It will not happen today, obviously, but you can still file them. And if you don't file them, that presents another problem because there's a question on a tax return that asks, did you file all the 1099s you were supposed to file? If not, will you? So if you are not doing it, your tax person is going to say no. And if you say no to that question, you might as well just say, IRS, come get me, come take all my money and come audit me. So if you're paying these people under the table and giving them 1099s or not giving them 1099s, you have nothing to document where you're getting these deductions from. The government just want to make sure somebody paying money on that tax. Repairs and improvements. If you're in a home, the percentage just for your business is deductible. If you, for instance, like I'm in my home office right now. So if you go and you do something and it's just for that office and it's not for the entire house, it may be 100% deductible. But if I go put a new kitchen on, well, I might use the kitchen for, you might use the kitchen for preparing meals for the children, but that kitchen is not exclusively for your childcare business. So you're only going to get a percentage. And when we talk about renovations and improvements, these things, if you own the property, get added to the basis. You know how we talk about increasing the value of our property? So if you have major repairs and renovations, these things increase the value and they need to be depreciated. So here goes your tax person again. Oh, I see you did that playground. Can you please give me the purchase order or your invoice or whatever? I need to see what date it was so I know what date I need to start depreciating. I need to see the amount so I know the full amount to depreciate. Just because you put a deposit of $2,000 down, if you're making payments on something, you could be cheating yourself. So these are just some of the conversations we've had this week already with people. And it goes back to bookkeeping and documentation. Last year, we did not work with people that were not our accounting clients. We did not do your taxes. No, ma'am, no, sir. And the reason why is because you miss out on so many things. This is what we need. I got an email a short while ago. Someone said, what do you need? I'm about to tell you. So you need a profit and loss statement. This either needs to come from QuickBooks. It can come from childcare software. The one that's pretty good is Kid Care for Homes. We don't support it, but it's pretty good for you if you want to use it. I recommend QuickBooks Online. You can also manually prepare your profit and loss if your business does not file an entity return. So if you have a C Corp, a S Corp, a partnership, a nonprofit, you need to have financial statements. You need to have a balance sheet as part of your tax return. Okay. So if your business is not a sole proprietorship, you really need to get books in place because the government is expecting that you do. And those books, those statements need to agree with your tax return. Now, it's good to have QuickBooks, but you ain't out of the woods yet because you also need to make sure these bank reconciliations are done. Bank reconciliations help ensure that everything that happened in your bank is in your books and everything that happened in your books is in your bank. If you do not reconcile your bank account, there's no way to know if your books are wrong. And we will tell you, please reconcile. And if you can't reconcile, that's fine. We do accounting. We can reconcile your books for you. We are not required to examine all of your receipts, but we do ask for the reasons I mentioned on the last slide. You break out separately any renovations, any repairs, or any purchases that you paid more than $2,500 for so that we can comply with IRS regulations. And if you don't have accounting software, we will ask, and this is only for my sole proprietor people, we will ask, did you provide your income and your expenses by category for the year? Okay. So if you don't know what a profit and loss is, maybe I did a training on that a couple years ago, but you can Google, you can find a template of a profit and loss, or you can work with us and we'll do one for you. If your expenses are not totaled, don't send your tax person a bunch of receipts. That's bookkeeping. It can be done for you, but there's going to be an additional charge so that all of that stuff can be done so that the return can be done. You can decide to have us do it for you going forward so you don't end up in that position at the end of the year for 2023. If you made estimated income tax payments for 2022, you want to get the IRS printout so you can receive credit for all of these payments. A lot of times we go in these IRS systems, we making these payments. If you're not careful, you can apply your payments to all sorts of things. We ask for the printout because we don't like IRS letters. We don't like the IRS questioning us. So we want to make sure we crossing all the T's. If you commingle, did we have any comminglers in the house? Did we have any comminglers in the house? If you commingle, you need to check your bank and credit card statements for all of your accounts to make sure you're not missing any deductible items. So I'm not judging the comminglers. This is not the commingler conversation tonight. We can talk about that next month. I do have a training. We'll be talking about that next month. But if you commingle, remember, if you're just giving your accountant the information from your business, they don't know about the things that are being purchased with your husband's credit card or your wife's credit card and your personal account with your cash at the flea market. So you want to make sure you have all of these things added to your books so that they can be added to your financial statements and added to your tax returns. Also encourage you all to look out. Can y'all hear me okay? Marion said she can't hear me. Can y'all hear me okay? Also want to make sure you look out for all of your 1099s. It could be a 1099 NEC, it could be a 1099 miscellaneous, and it could be a 1099K. Look out for these 1099s, okay? Thank y'all for the sound check. So all income is reportable. Just because it was not on a 1099, it is reportable. You know how those parents come and they ask you to give them your EIN and the amount they paid at the end of the year? Guess what? When you don't report that cash, that person is typing, their tax person is typing your EIN and the amounts into the IRS system, and the IRS runs checks. And they have a nice little letter called a CP 2000. And that CP 2000 will actually tell you that the IRS has evidence or information to the fact that there was income reported or collected under your EIN or social and you didn't report it. And that's usually the gateway. That's the gateway to the audit. If somebody could tell Marion to try to go out and come back in. So mortgage payments. Mortgage payments are not deductible. Mortgage payments are not deductible. Mortgage payments are not deductible. You get to deduct the interest and the property tax that you pay on a property that you are mortgaging and using for your business, but you do not get to write off the actual mortgage payment, okay? A loan at note, credit card payments are not deductible, but you do get to write off the expenses that you incur with your credit card, whether or not the credit card is paid off. So if I swipe my credit card in December 2022 and I swipe $25,000 that month, I don't have to pay the bill before I can write it off. Because the minute I'm a cash basis taxpayer, like most of you, the minute I make that charge, the minute I've incurred my expense, okay? So because of that, I get to write it off, but I don't get to also turn around and write off the credit card payment when I pay the credit card bill. For that would be to double dip, and double dip will get you caught up with the IRS. We have another rhyme that we say for that in the accounting world. So tuition for your own school-age child is not deductible, okay? nor do you qualify for the home care educator credit for homeschooling. Y'all know how y'all like to look nice, and y'all buy those nice brooches and all the fancy clothing and everything because you got to look good. You got to look good for your photo shoot. Anybody like to look really nice every day and represent their business well? Is that a cost of doing business? You know, you're the owner, you're the boss. Well, guess what? Professional hairstyles and clothing are not deductible. Even my favorite, some of my seasoned ladies. Ooh, I don't want to get beat up. Some of my seasoned ladies say, but it's for professional upkeep. That is not in the IRS regs. And the rule of thumb I like to use to help people understand what they can write off or not is, are you wearing promotional material? Do you have your business information on it? Is there a logo? Is it actually advertising? Could it be seen as a uniform? But if you're just writing off your professional upkeep, then that's not deductible. So you can ask yourself, when you wear clothes, would I look ridiculous if I wore this anywhere else? If the answer is no, it's probably not deductible. The scrubs are fine. But when we going shopping, professional upkeep is not an IRS business expense for childcare business owners. Commuting, these business miles, going back and forth to your primary work location is not deductible. Going back and forth to your primary work location is not deductible. If you want to write off the miles you drive in your business, you need to have a log. You need to have dates. Like, I went here for business on this day for this reason. Because if the IRS audits you and you can't justify why you have 39,472 miles for business that year, and you can't show them where you went, it's going to be disallowed. Okay? So you're commuting to and from work. The IRS never gives you credit for writing off your travel to your primary work location. Now, for the people with multiple work locations, that's a different conversation. You definitely want to make sure when your tax person says, what questions do you have for me? Or what information would you like to share with me? Make sure you're telling them everything that they need to know. Uncollected tuition. Can we write off tuition that parents were supposed to pay us and they did not pay us? No, we cannot. And the reason why you cannot, I'm going to make somebody feel better today. I got an email. Can I write off my bad debt because they never paid me my money and they owe me $5,000? So y'all saw the letter if you on the email, if you're on our email list, and she did give us permission to share that. But you cannot deduct uncollected tuition. It's like this. If you never received the money, it was never counted in your income. So if it was never counted in your income, if you write it off again, you're going to be double dipping. Uncollected, not received by you, not reported by you. If you're a cash basis taxpayer and you count your money when you earn it. Now, if you're an accrual basis taxpayer, that may be different. And if you don't know what an accrual basis taxpayer is, you are not an accrual basis taxpayer. Most of the U.S. population is not. Okay? So let's talk about some common mistakes and misconceptions that we have. Personal expenses are never deductible. They should not be on your profit and loss statement under any circumstances. If your profit and loss statement says personal expense, I'm going to say we cannot prepare this tax return because we know that this is incorrect. And we know that if that is incorrect at such magnitude, there's other things that are incorrect as well, and we have licenses to protect. And other clients. Failing to maintain an accounting system. That's a huge mistake. When you don't have an accounting system, it causes business owners to miss out on thousands of dollars in deductions, and that makes them pay too much in taxes. And if you want to do tax planning, it's virtually impossible. We had to tell people today is only Tuesday, and I'm saying this week, this was like yesterday. We had to tell a person, we cannot help you with tax planning because you don't have records and books. So not having an accounting system Can hurt you in a lot of ways. You cannot deduct both the mileage that you drive for business and the actual car expenses. You either get one or the other. And which one you get is dependent on your situation. You do not get to choose. You do get to choose that initial year for that initial car, but you can't flop back and forth depending on what works out best for you. So if you're taking a standard mileage rate, you just get the standard mileage rate, no gas. But if you're taking actual expenses, this is when you get gas, you get toll, you get oil changes. Now, somebody's probably thinking, oh, I want to do that. That's more money. Not usually, because it goes by your business percentage, the percentage of the vehicle you're using for business. So that's why during our onboarding calls, we're asking our clients when they become accounting clients, does your company own a vehicle? Do you use your personal vehicle for business? We even have a form for them to fill out. This is why we're asking you these things. These are not things that your tax person is asking you because they just want to know. They're asking you so that they can comply with the law, keep you out of trouble, and keep them out of trouble as well. Sole proprietors, single member LLC, my Schedule C filers, business and personal returns, again, must be filed together. Every year, we get someone that comes to us, hey, I already did my personal taxes. Can you do my business taxes for me? No, because we have to amend your personal and file them together. There's a Schedule C form called a profit and loss from business that goes with your personal. So your business and personal are filed together if you are a Schedule C filer. And if you are a partnership, S Corp, or C Corp, your business return must be filed before your personal return. Information from that business return is needed so that your personal return can be filed. If you're an S Corp or a partnership, you're going to get a K1, K like Kellogg, 1 like number 1. You're going to get a K1 form for each owner of a partner or shareholder in a business. And then that gets filed as a part of your 1040 with all of your other stuff, which is spouses stuff, okay? The reason why we require corporations to file, even though there's no pass through, is because if you were naughty and you took dividends out of your corporation, or maybe you weren't naughty and you intended to, you could have a 1099-DIV, and that needs to go on your personal return. So as a general rule of thumb, we file all business returns before personal returns. Y'all might want to take a screenshot of this slide. This is required documentation. We have an organizer that we ask our clients to use to complete. We ask them to complete this every year because we have to have signed permission every year. And every year in the box, and it's a secure form, so we don't want you emailing this stuff. We want you using secure things. Every year, somebody gives us a selfie. We ask for an ID, and people, husbands and wives, they send in the selfies. We don't want your selfies. We want an actual ID because it's a requirement. We need proof that your dependents are really your children, that they are related to you in the way that you say they are. If it's your son, your name should be on a birth certificate, and proof that they lived with you. That's not because we're trying to get in your business. It's not because we don't trust you. It's because the IRS requires us to do so. And if we don't, guess what? License loss. Can't have that. If you're married filing separately, we still need your spouse's social, name, and birthday. The IRS requires this if you're married filing separately because they use it as a measure to check. Are you filing one way and you filing one way? And the IRS has removed the marriage penalty from the tax code. So if you're filing single or married filing separately, you're going to have the same effect. So you may as well follow the law and don't risk getting into trouble. We ask for an IRS EIN letter for all businesses when they come to us the first time. People file the wrong tax return every single year. And then they go back and they get mad at their tax person. You said you was an S corporation, but you didn't understand that you needed to actually be granted that status by the IRS. It's not your tax person's fault. But we take a step further and do extra due diligence. We want to see the IRS letter. We ask for your prior year return because we want to see, are you leaving something out? It's an added step of due diligence. We're looking to see, what did you do last year? And we want to see, is it reasonable to expect that you would have the same things this year? And if you leave something off, we're going to ask you about it. We need to have that profit and loss statement so we know what your income and expenses are and where it should go on the tax return. We need the balance sheet for partnerships, S Corps, and C Corps, because we actually have to do a balance sheet as part of your tax return. There's a Schedule L, L like Larry. If you got approved recently to be an S Corp or a C Corp, we need those letters, EIN letters, or the approval letters. All of your 1099s, W-2s, and other tax forms. Do not file your tax return because you're waiting on one more form and it wasn't that much money. Because that one more form that wasn't that much money will cost you. I don't care what the mortgage man say. If you jump and you leap too fast, what's going to happen is you're going to get a CP 2000 letter from the IRS, and then you could potentially open yourself up to more trouble, like being charged with substantial underpayment of penalties, or even being accused of tax evasion. If you're getting a refund, we need your direct deposit information if you would like direct deposit. Otherwise, you'll get a check. You have to complete our organizer. We love you. We appreciate you. Our clients have been with us 11 years, but we have to have this because it's required of us to have this on file. No exceptions. And we need to have, as part of that organizer, it's a signed engagement letter that has payment. The same way the state wants you to have all your paperwork in order, the state does the same thing to us, and the feds do it to us. If you got unemployment, at any point, you should have those forms. In most states, you can actually go on the website and print it out if you don't have it. The same as with the 1098Ts for school. A lot of people are saying, I didn't get it yet. A lot of the schools require you to go into the financial aid module of their portal, and they want you to actually go in there and download it yourself. And some mortgage companies are like that too. So payment, we will not start tax returns until we actually have payment received, and we will send you an invoice so you know what to expect. And hopefully we get everything done the way it needs to be done so that we don't have to send any additional billings. That's why we go through these lengths, so that you can be served efficiently, accurately. So this is our process. This is actually how you work with us. So when you want to work with us, the first thing you would do is you'll complete an organizer, pay your deposit, and upload your documents. If we think we need more information, we'll ask you for that, and you will get an invoice. Once the invoice is paid, we can start bookkeeping if we have to do bookkeeping for you. Then we'll do the taxes. We'll contact you with any questions. We usually call you. When your tax return is finalized, we will deliver your results and discuss them with you. We're also going to, in our discussion with you, we're also going to send you a video when it's done. Please watch the video. This is your money. So we send you this video and we walk through line by line. The reason why we send it before we talk with you is because we want you to have an opportunity to look at what you're seeing and be able to ask any questions that you might have. But you need to be able to understand. So whenever somebody that's dealing with your money sends you a video, I strongly encourage you to watch the video and take notes. After your return is finalized and you're okay with everything and you sign off, we send you consent so that you can sign. Once it's signed and approved by you, we automatically file. This means if you don't understand your tax return, don't sign it. If you don't agree with your tax return, don't sign it. Once you sign your tax return, that's permission to file your tax return. So if you have questions back here in one of these stages, you want to communicate. Okay. Somebody asked me to go back to the last slide. I'll go back for a minute. So I will go back. This is a slide that I say you probably want to take a little screenshot of. Might come in handy. On our website, we actually do have a checklist. It's not as pretty as these slides. I did the checklist myself, but all of the information is still relevant. And it has a full detailed list of all of the documents that you'll need when you're going through our engagement process. Okay. So the next thing is people want to know how can you get started to work with us for tax preparation? And those are the steps that I outlined below. We even have a video for you. And so when someone new comes on, we actually send you a video. The video is not long, it's only a couple minutes. And we tell you when we talk to you, but we also send you a video because in order to keep our rates competitive and affordable for everybody, we need you to actually do as we ask so that we don't have to send that additional invoice after you've already paid because we have to go back and rework and redo. So you want to complete the organizer. Once you complete that, we'll ask more questions and ask for anything else that we might need. You want to check your email, including your spam folder. The email that we use when we work with you is not the email that you received the 5011 emails on me from. Our business email is actually team, like a football team, go Eagles, at jonestaxesonline.com. Okay. So if you're working with us, check your email. We will text you and ask you to check your email, but we're all business owners and we should be all checking our email for communications. Okay. After you complete your organizer within 3 business days, Monday, Tuesday, Wednesday, Thursday, Friday, not Saturday and Sunday, within 3 business days, you'll receive a request for additional information. And that's when you'll get the invoice. And then we can start your work once it's paid. And if you would like us to do your taxes, you can visit us on the web at jonestaxesonline.com. In the top of the website, there is a button that says Start My Taxes. And we also can give you the link. But remember, if you have an S Corp, you need to do a business organizer and a personal organizer if you want us to do your personal. If you have a sole proprietorship business, even though you have a business, you just need to do the individual organizer. So our single member LLC folks that are not taxed as S Corps or C Corps, you just need to do the individual organizer. Our multi-member LLCs you need to do the business organizer. And if you want the personal, you can do that one too. Each person would do a personal one. So how many of y'all are still not ready for tax season? Like all that stuff I told you was fine and well, but you still ain't ready. That didn't change anything. Like it's okay to tell the truth because I got something for you. Like, yeah, that's nice. You told me I need these documents and you told me not to commingle, but I'm still not ready, Shanita. I'm still not ready. I don't know about this. Out of you all that have books, accounting system in place, what accounting system are you using? Can I get a Q for QuickBooks? We got an X for Zero. Miss Taffin said her accountant got her. Yeah, your accountant is cute too. And they love you. Miss Taffin is one of the first people I met in the childcare industry when I decided to actually work with people in other states. So, okay. So for you all that are using QuickBooks, are you sure that your QuickBooks is correct? Oh, Wave. You might want to come up out of that Wave situation. Okay. So, not ready, not sure about your books. How would you like to not only be ready for tax season, but be ready for the entire year? Would you like to be ready for the year? Would you like the satisfaction of knowing that you've captured every deduction and credit that you're entitled to? Would you like that? Would you feel more secure if you could not just get your taxes done, but also get some strategy that you can implement to help you save money in taxes? Would tax season be easier for you if you also had a budget and a plan to go through the new year to help you be even more prepared for the next year? Now, this ain't just any kind of janky budget. This is a budget to help you make and keep more of your hard-earned money. A budget that's going to help ensure that you know how much that you need to pay in taxes during the year so you don't get hit with a large balance at the end of the year. Well, if your books are wrong or missing information, would you like a full report that you could give your bookkeeper so that they can make corrections? If you're doing it yourself, you can do it yourself. Or you can have our team of childcare expert accountants fix it for you. Would that be helpful with this book situation? I got something. I got something for those of you that don't have books either, but this is just for tonight for those of you that don't have books. Will all of that put your mind at ease so that you can focus on running your business and not stressing out for the next 3 months? Because that deadline come up faster than you might realize. Well, I have something for you. Introducing the Childcare Profit Protector. The Childcare Profit Protector is going to protect your profits from taxes, more taxes than you need to be paying. It is going to protect your profits from being understated, overstated, just wrongly stated because your books are bad or you, excuse my grammar educators, ain't got no books. So this package is going to help you protect these profits and help you to know if your accounting is set up properly. And it's going to give you accurate information so that you can make informed business decisions. Not just judging, are you profitable by what's in the bank? So this is what it includes. This is not doing your accounting. This is not fixing your accounting. I want to be crystal clear because there are no refunds. And the Childcare Profit Protector, I'm going to tell y'all what's all inside. It's usually $34.99, but today we're selling it for $24.97. Inside, we're going to review your QuickBooks Online, and you get a written report. You can take that written report, give it to someone else, take it, use it for yourself, or we can use it and fix your books for you. Also, you get a video. The video is going to be us actually going over your books, letting you know, hey, this is wrong. This is why it's wrong. This is how it needs to be fixed. And this is the impact of this wrongness on your business. We also are going to project, estimate how much are you going to owe in tax based on what we see in those books. And usually when we estimate that, it's funny how people go back and find stuff. And they're not making things up. They're just thinking that, oh, that's just a little bit that won't help me. That I just want to get it done. No. We're also going to sit with you and do an annual budget. That means you're going to map out your whole year. You're going to know how much you expect to make. You're going to know how much you expect your expenses to be. And from that, you'll know what your profit is. If you know what your projected profit is, you know what you can afford to do, what you can afford to pay yourself, what staff you can afford to hire, and you also know how much you can expect to pay in taxes. And then you can enter into the world of tax planning to reduce whatever it is you estimated to owe. Now, just for tonight, right? Just for tonight, if you do not have books, we will set your books up if you want to order the Childcare Profit Protector. And if you want to order the Childcare Protector and you are concerned about your books, we will do the regular services of the Childcare Profit Protector. So we are going to drop the link for the Childcare Profit Protector on Facebook and in the Zoom chat so that you can get these numbers together. Our lovely team is in the building. So again, this is what's included. We're going to review your books. We're going to give you a full report, letting you know what's out of place, what needs to happen. And if everything is good, then you just get that peace of mind that I'm in good shape. But you still get a budget. You still get a tax strategy. And this is a tax strategy that you can use not just this year. You can use it for 2022, 2023, 2024. Whatever we find in there, how we're able to help you, you'll be able to implement this tax strategy for years to come. So this tax strategy oftentimes will save people more than they actually pay for our Childcare Profit Protector service. So is anybody here besides Ms. Taffin that feels good about their books? Is anybody happy, completely confident? You ready to walk into tax season like the boss you are? I know not a lot of us, right? And that's okay, but we're going to be ready. So if you feel okay about your books, but maybe you don't feel okay about your strategy overall. You have some tax questions. You have some specific things about your specific number, about your specific situation, and you would like to have a strategy call to hash that out and get expert advice. If anybody would like that expert advice, that strategy session, if you drop strategy in the chat or the comment box, we will get you the link for that if you want it. But the Child Care Profit Protector link is 100% there. So now I am going to take a few questions, but I actually have some questions that some people have submitted earlier. So I'm going to answer their questions first, if you all don't mind. Okay. Miss Rivera, I can't say your first name. I don't want to mess it up. What exactly do I need to do before I have a CPA do my taxes? Hopefully I can have you do them. Miss Rivera, we would love to do them. You sent an email, so you've heard the presentation. I believe I saw you here tonight. We'll also send you that video. I think I might have sent it to you, but we'll send you that video so you can see the overview of our process. And also we did send you the link so that you can get started. How can I be prepared? Thursday night, we're actually having an information session. And on this information session, we are going to be able to answer like all of the specific questions about getting your taxes done. We're not giving out specific advice, but if anyone has specific questions like, hey, I'm doing this process. Do I need to do this form? Do I need to submit this information? That's what we'll be covering that day. What kind of spending totals do you need to have ready? Ms. Rivera, you need to have ready anything and everything that you spend for business. So I'm actually going to give you some examples. Yeah, I think I got time. I'm going to pull up an example of a Schedule C. And if you don't know, you should have accounting, especially if you have a partnership, a S Corp, a C Corp, excuse me, definitely a nonprofit because it's not your money and it's not your business. But these are the categories that the IRS looks at. They're looking at your income. They're looking at your advertising, your car and truck, your employee benefits, your interest, your payroll, your utilities, your rent. So when you work with a good accountant, your accountant will be doing your books and making sure that things are going into the categories. That's why we ask so many questions too. What's the max amount in deduction I can deduct? I love that question. There is no such thing as a max deduction. There is no such thing. It is what it is. And whatever it is, if it's deductible in your business, you'll get to deduct it all in that year. Or some deductions get carried forward into the next year, but there is not a maximum. Okay. And I know Clatanya is sending the links directly to the people that needed them for the strategy. The next question that she had for me, oh, this is another person, Miss Tanya Johnson. Tanya says, are there any new tax stuff for the self-employed? I hear most people are getting back less on their taxes. And if you have more than one business, do you have to add it to this business if you're joined to someone else? So that was kind of a compound question. Let's break it down. Are there new tax laws for self-employed? Not really new tax laws for self-employed per se, but what you probably were hearing about were the changes with the self-employment. You probably were hearing changes with the self-employment tax, not self-employment, I'm sorry, the child tax credit, the refundable portion, no longer having advanced child tax credit. You might have heard people saying the things they were saying because the grants, oh, we didn't talk about ERC. I'm going to talk to you about that in a minute. Probably because of the grants that some people got and it caused their income to be higher than it would have been otherwise. If you have another business with someone else, you would not combine your businesses, but let's say, for example, your initial business is a Schedule C. And let's say that business you have with someone else is a partnership. So your Schedule C already gets filed on your 1040, and that partnership is going to give you a K1 that also goes on your 1040. So technically, it will be joined together on your personal return, but we would never mix the businesses themselves together. I hope that makes sense. Let's see. Okay. So Fine Real, I hope I'm saying your name correctly, says, I watched the pre-recorded video on Brightwell. Thank you for watching. That was so nice. Brightwell had me come talk to their audience earlier this month. I learned a lot from it. I want to clarify on one of our checklists, it says 1099 miscellaneous is for reporting self-employed. Wouldn't it be 1099 NEC? Good question. Or which one should I use? If I'm a partnership, oh, so fine, you were doing so good. So if you are a partnership, you should not be, you know what? You should never, and I use the word never very lightly. I don't say it often in tax. There's very few instances where you would ever get a 1099 from your own business. You should not have a 1099. So I started with the last part of your question first. I actually have a couple of lovely clients that were 1099 in themselves, and we don't want to do that. So if you're a partnership, the partnership would have books, and if the partnership has books, then when the return is done, each partner will get a K1, and that K1 will be filed with your personal tax return, but no 1099s for partners. Now, in the 1099, 1099 NEC, and 1099 miscellaneous, that happened a couple years ago. The NEC is not new. The IRS just resurrected it from the past. And the NEC is for non-employee compensation. Generally, when someone works for a company and they're not an employee and they're an independent contractor, I'm not getting into if you're an independent contractor or not, that person would get an NEC. A lot of the states are giving out 1099 miscellaneouses for the grants, and miscellaneouses can be for a variety of different things. So if you are having a professional file your 1099s, they should know which one is appropriate depending on what service or what service that the person receiving the 1099 did for you. So as a reminder, and I didn't say this in the beginning, if anyone wants to send a question, please do not send me direct messages. We're actually pulling the questions from the main chat. So Diane Todd, she sent a message. See, I told y'all get these questions in earlier. Y'all wasn't playing. Diane wanted to know, how do you find out if your state is taxing stabilization grants? You will ask your state. You will ask the issuer. Some research is done when we come across a state that we may have not have seen anybody with the grants before. We actually go do the research. Your tax professional ultimately should do the research, but it is on you to tell them how much of your funds is stabilization grants or grants, period. So if you don't have books, if you have accounting in place, your grants should be down below your net income in the other income section. And that's going to trigger to your tax professional, oh, this money is different money. I need to investigate. I need to ask questions. So Letha had asked, if you were a partnership but changed to an LLC in the middle of the year because the partnership, oh, she said, what if? So if your business changed, then you would actually, now I don't know what an LLC is, Letha. We talked about this, ma'am. So if you were a partnership and went to an LLC, I'm assuming that the two partners stayed together and the two partners formed an LLC. If that's the case, you're going to file the same federal form because there is no such thing as a federal tax return for an LLC. So we had a lot of other questions. The other questions that we had, what I'm actually going to do is I will bring back some of this information for these other questions because I want to talk to you about employee retention tax credit for a minute. There's some important things I want to make sure you understand about employee retention tax credit. And I also want to answer questions about the Child Care Profit Protector because I do want you to buy it, because I do want you to have what you need and be protected in your business. So y'all ready to hear about this ERC tax stuff? If you're ready to hear about ERC, can I get an ERC in the comment box? Because if ERC is not of a concern, I will glance over it and go to my next topic. So ERC. ERC is the Employee Retention Tax Credit. And that credit was given during the pandemic so that people could stay in business and afford to have their employees. So when the government issues the ERC tax credit to a business, what happens is the amount of income, the amount of expense that you pay for payroll is reduced by that ERC amount. So what that means is if your payroll was $500,000 for the year and you got an ERC credit of $200,000, your payroll expense just went down. If your payroll expense went down, your profit went up. Y'all know what happened when your profit go up, right? Your taxes go up. So if you receive your ERC for 2020 and 2021, that means this wasn't captured on your tax return. And that means you will need to amend. It also means you will owe money because your taxes were done and either you owed and you paid under that amount, or maybe you got a refund. But if what happens is your profit goes down because of ERC, what's going to happen is, if your profit goes up because of ERC, because it reduces your expense, you're going to need to pay that tax. Now, this isn't the ERC conversation. I'm just talking about the tax effects. This is not a reason to not get ERC if you qualify. By the way, time is ticking for ERC. So if you need ERC and you had a payroll company, we are not helping with ERC with people that did not have payroll companies. I do have a colleague that is handling that I can refer you to, but we are not doing it because we are very busy during tax season and you go through a lot of extra stuff when you didn't have a payroll company. But you have to have actual W-2 people on payroll, and you cannot count yourself or your family members towards calculation of the ERC. So that's a very important thing that a lot of people need to be mindful of. So with the ERC, make sure that ERC that you would have received was actually included in your tax return. A lot of people got ERC and they didn't tell their tax professional they got ERC because they didn't know that they should. So as a result, they didn't report that. So ERC in and of itself is not income, but it does make your taxable income go up. Somebody is saying, is anybody confused? If you're confused, say yes. And if you say yes, I'll take another minute and make sure I break it down because I want to make sure you understand. Okay, thank you. One person was honest because listen, when this ERC came out, accountants everywhere far and wide were confused as well. And then they kept changing the rules. So I'm going to state it to you another way. If you paid me $100 and then I gave you back $40, did you really pay me $100? No, because 100 minus 40 is 60. That's what happens with your payroll. So now you gave me $100, I gave you back 40, so I'm really only up $60. You only out of $60. So now that means that profit that was more, that profit that was less has now increased because you got $40 back in the pot, or however much your ERC was. So now your tax has to be calculated based on that net income. And now that that net income is higher, you have to pay tax money back. But nobody is ever paying tax money back in an amount that is no one's ever paying back more than they got in ERC. So you're usually still on a up and up. And most ERC providers are charging in part or somehow as a function of how much employee retention tax credit that they are able to give you. And most companies do require that the payment be made up front. You will need accounting records because you will need to demonstrate the decrease in your business if you weren't shut down. And there's a whole bunch of criteria that you have to fall into these boxes in order to qualify. So that's yet another reason why you have to have books. So how many people know they need to get their books checked out before they get their taxes done? How many people know it ain't right? And you know that if you continue to go on like this, you stressed out, you wait until the end of the year, every year. Maybe you got a bookkeeper, but you're not sure you trust said bookkeeper. And you're just tired of it. You want to draw a line in the sand and have a clean starting point. If that's you, you really need to go ahead and get yourself the Childcare Profit Protector. If you don't have books and you know you need to get them set up, You can purchase the Child Care Profit Protector, and we will set your books up. The setup includes setting your books up and getting your first month reconciled, and then we turn it back over to you. That's what the setup includes. So if you sign up for Child Care Profit Protector, you are either going to get all of this stuff inside of Child Care Profit Protector because you have books already, or you are going to use that instead, only for the people tonight. Instead, you are going to use that to actually have it cover getting your books set up, and then you will be managing it yourself. We do not do training outside of our Child Care Accounting and Business Academy. That's the only place that we train on QuickBooks. So, what questions do y'all have for me? Yeah, please put your questions about the Child Care Profit Protector in the general chat. There will be a recording of the webinar available for, I think it's 48 hours, and then we take it down. So if you want to watch it, you have to watch it within the next 48 hours, or it goes away. An LLC is an LLC formed in your state. A C Corp is formed in your state. And the differences between them, we really don't have enough time to go into that. We do go into that. We went into that in one of our prior trainings, but there's a lot of legal, that's actually a legal thing. Why do we need the Child Care Protector? Y'all want to hear why you need it again? Well, if you're not sure that your books are right, if you think there's a problem, if you're not sure you're getting all the deductions and credits that you need, you may need the Child Care Profit Protector. If you want projections, if you want a tax strategy, and you want a budget, you may need it. But if you think your books are right and it's all good for you, praise the Lord, you don't need it. This is not for you. Have a blessed night. But most people on this call don't have that confidence, and that's evidenced by the volume of questions that we're getting and the volume of emails that we receive surrounding tax returns, being prepared for tax returns. And Margaret wants to know, what does it cost to get her books correct and file her taxes? So we're having an information session tomorrow. And tomorrow, yes, we serve all 50 states for tax preparation. So we're having, not tomorrow, it's on Thursday. So on Thursday, we are having a actual information session. And on this information session, you'll be able to ask questions specifically to helping you have your taxes prepared. So if you would like to have your taxes prepared by Jones Taxes, we will be answering questions about our process. We will not be giving tax advice. We will not be giving tax strategy. Tax strategy is given in our tax strategy call. If you want to ask specific questions like, you think your taxes are wrong for prior years, you think you're filing the wrong form, you're not sure your entities are right, those are conversations that we need to have with you one-on-one. You don't need to, we would have those privately. But if you have general questions after this training, I want to get my taxes done, I'm not sure, what do I need to do? How do I need to get it together? We're going to get together for an hour, and it's going to be an hour earlier than tonight was. It's going to be at 7 Eastern, and we'll have an information session that's for people that are interested in having us do their taxes. That's what that session on Thursday night is going to be. Ms. Margaret, you're interested in having your books correct, so we can actually have someone on our team reach out to you tomorrow. I think we actually have your information. I saw your name a little while ago come up someplace else. Yeah, we do. So we actually have your number, and you know what, Ms. Margaret, we actually sent you a message. So if you check your email, that should be helpful. Okay. Oh, I see. Yeah, you'll want to check your email. Someone from our team will reach out to you, and we can talk about that. Yes, I am available for one-on-one. That's our tax strategy session. So everybody that needs a tax strategy session, please do me a favor and drop the link. Please do me a favor and just type strategy, and we'll be sure we get you the information to schedule that tax strategy session. And we're only giving them out this way because they are in limited supply. We don't have a whole lot of them because it is tax season. So we are busy. So we do have some available. So, and please put your comments and your questions in the main chat, because y'all want me to try to walk and talk and chew gum and do all the things, because I be getting into trouble. And everybody that is registered for the webinar. So tax strategy is included with the profit protector. That's a good point. You know what? I'm gonna just drop the link, and if there's no more spaces, we'll see how the calendar goes and we'll open up some more. So with the profit protector, when we look at your business, tax strategy is the thing that we do. But first we look and make sure your books are right. Because if you build a correct strategy on incorrect numbers, guess what? Your strategy going to be bad. So we look at the books, we make sure it makes sense. We do whatever calculations that we need to do. And then that's how we are able to determine which strategy is right for you. So we give you a strategy. Some of the strategies are things that you can implement yourself right away. Other things are things where you may need to get more involved, more in depth, but we don't know until we actually look at your numbers. But yes. So you can absolutely, it's a one-on-one session. It is on Zoom. So when you schedule your strategy session, the cost, they're two separate offers. So if we have a tax strategy call, we have a tax strategy call. If you have the profit protector, the strategy call is included within it. So we don't do any, it's one offer, the other offer. You can buy both, but they are not, how do they say that? We don't combine any offers, however that goes. And that's because we're actually sitting down, talking to you, working on your stuff and getting in your business. And for that very reason, it's a Zoom call. So we need you to be at your office or in your home in front of a computer. If you show up to your strategy session, don't judge, but people have showed up to their strategy sessions in the salon, in the supermarket. If you want to use your session, the session is an hour for this tax strategy only. If you want to use your session in a supermarket, you can, but I really don't want you to do that. Once you sign up for the strategy session, you're going to get a series of emails from us. So we need you to check your email. When you check your email, we're going to invite you to our portal. Once you get invited to our portal, we're going to ask you to upload your last year tax return. We're going to ask you to upload your profit and loss statement, your balance sheet. We're going to ask you to send in advance any questions you have. And we want time to think about your business before we talk to you. So we don't want you to send it right before the meeting and then we hop on a call. If you want to do that, you can do that. But I really encourage you to allow me to treat your money the way that I would want my money to be treated. So if you're scheduling a strategy call tonight, I'll open the calendar now. Pick a date when you know you will have all of your information. It's going to be on Zoom. So make sure you're in a place where you can speak comfortably. Make sure you're in a place where you can talk about your numbers, where you can see your screen, where you can share your screen if we need to. I can share my screen, and where there's no one around in the conversation that we can't talk about your business, because we really do this. That's why y'all saw I was guarding that strategy link. And I was guarding that strategy link because, time is our most precious asset. So I want you to make the most of your time. And I want to make sure you show up for yourself. So once you schedule the strategy session, you will receive a series of emails. You won't get them tonight. Some of them are automated, so some of them you will get tonight. But as soon as this training is over, my team is going to go run and hide from me. But within 3 business days, you will get another email. It's going to invite you into our portal. We need you to accept it. After you get invited into our portal, we need you to upload the information that we have. You may have some IRS letters that you want us to look at that have nothing to do with your QuickBooks. That's fine too. We can help you with whatever tax and accounting situations or needs that you might have, but we want to make sure you show up prepared. It's tax season. You show up to that meeting and you don't have your question, you didn't send your questions, we don't know anything about your business. So if you show up to that meeting, make sure you show up to the meeting. You show up for yourself. You make sure you show up to that meeting and you have everything with you that you would need for us to best serve you. We don't want you to schedule, oh, well, she got to schedule another meeting. That's not what we hear. That's not what we're doing this for. We really want to help you and add value to your business. And we really want you to walk away feeling like I'm in a better place than I was before this call. And if you decide to discover that you need to reschedule, do it ahead of time as much as possible so someone else can actually fill that space that you're going to be selecting. Okay. So once you sign up, if you haven't worked with us before, you'll get an invitation to the portal. You'll get an invitation to the portal within 2 or 3 business days. A lot of it is automated. And make sure you're checking your email. Make sure you're checking your spam folder. This is not coming from the email that you normally get from me. This is coming from our actual office email, the team at Jones Taxes Online. And I think the name of the email says Jones Taxes. So it could be unfamiliar to some of you. Make sure you're checking your email. And make sure when you enter, every time we sell this, we had problems with phone numbers. Make sure you're entering your cell number, your best number, so that we can contact you. Okay. And don't forget to send those questions in advance. Our consultation strategy call goes much faster than you think. If you send us what you need in advance, the conversations usually start out, this is my question. And we answer that question, and then you have a follow-up question. That's great. But we make sure we getting you everything you needed in the first place. A lot of us have tax professionals and tax preparers and all these different people, but these people aren't able to answer our questions specific to our childcare businesses, or these people aren't able to, actually help us with strategy. They're able to help us with facts. They're able to tell us how things work. But when it comes to the strategy part of it, we don't have it. And when you show up for tax preparation, that's just tax preparation. When you show up for tax preparation, no one is obligated to give you the game. No one's obligated to give you strategy. Their job is simple. Their job is to do a correct tax return and, see you next year. Okay. So if you don't have an accountant that you're working with all year, if you want the profit protector, the price is $2,000. What is it? Let me see. It's $2,497. That is the price until Friday. After Friday, it goes up to $34.99, which is the regular price. On a discovery call, the discovery call may not necessarily be with me. The discovery call is a free call. It's a 15-minute call. And on a discovery call, we learn about your business. We learn about where you are and what you need help with. And then we tell you what we're able to do, how we're able to help you. So the discovery call is not a place where we're actually answering questions, because in the discovery state, we're not actually working together. We're discovering if it makes sense for us to work together. But if you are a part of the childcare profit protector, that's when we're looking at your account and we're looking at your tax return. We're doing budgets. We're giving you a tax strategy. We're doing analysis. We're actually talking about your business. But on a discovery call, you may very well speak with an administrative person who's able to tell you what's going on in your business. So it's coming down Friday. What do you mean lifetime deal? It's not lifetime. It's one-time service. We do this profit protector. We're not doing your books. All we're doing is the services here. We're reviewing your QuickBooks file. We're giving you tax projections, which are estimates. We're doing one annual budget, and we're giving you a tax strategy. So if you wanted again another year, then yes, or at another time, yes, you would have to buy it again, because this isn't an ongoing service. Now, under our ongoing monthly accounting services, and our ongoing monthly accounting, these things are done every month because we work with our clients every month. So, and that could be a lifetime deal if that person chooses to stay with us, and we choose to stay with that person, then that relationship could last indefinitely. Okay. So the Profit Protector is available until Friday. The tax strategy sessions are limited. We don't have a lot of them on the calendar because you are speaking directly with me and we are speaking directly about your business. But we will not be giving any tax advice, any accounting advice, or strategy on discovery calls. We're just discovering if it makes sense to go to the next stage. Okay? So for anyone that is interested in having us prepare your tax returns, that meeting on Thursday will be a meeting where all we answer is, yes, this is how you complete the organizer. This is how you upload to the portal. This is, yes, you would need to submit that form. That is what we are answering. So I want to be sure, I don't want anybody to be confused or disappointed because I wasn't clear. So I want to make sure I'm crystal clear so that there are no misconceptions or confusions. But none of the services, none of the offers I made you tonight involve us doing your accounting for a lifetime. Nothing I sell will ever be lifetime, but nothing involves us doing your accounting for a lifetime. This isn't even about us doing your accounting. But if you don't have accounting on place and you know you want accounting and you're like, man, I've been meaning to do that, we will, if you purchase a childcare profit protector, instead of doing this stuff, we will set your accounting up for you. That is what the offer is. But setup is setting up. We will not continue to do it unless you decide to work with us, and you basically would pay for monthly accounting services. So that's a different conversation. And that conversation can be held tomorrow night as well, if anybody has any questions about that. Before I go, I do want to share. I'm surprised no one asked. I do want to share our fee schedules in case anybody wants to screenshot these. These are starting rates, meaning these are the rates that we will bill. These are the rates that we will bill. If you do not provide all of your information, or we need to make material meaning meaningful changes to your tax returns after we have already done your tax returns, then that's why it's starting rates, because it's going to be more expensive. If we need to do any level of accounting to do your books, then these are just the fees, the starting rates to do your tax returns. So I wanted to make sure everybody understood so that you know where we're starting from, so that I can be respectful of your time and you can understand what's going on. So I'll read the fees. Corporation tax returns start at $1,000. Partnerships start at $1,000. S corporations start at $1,000, and Schedule C's, if you are one adult, you are starting at where are the Schedule C's? Schedule C's, so you would pay for the individual base plus the Schedule C. One person, it would start around 600. So if your Schedule C is starting at 600, when we see your documentation, we actually give you an invoice before we start, and the invoice actually has the full fee. You do pay a deposit when you complete your organizer, because the minute you submit your organizer, we're doing work, we're researching your files, we're contacting you for more information. So before you even start the organizer, we tell you to make sure you have all of your documents ready. For the S corps, they start at 1,000. Most people in this call do not are not at the revenue range where their taxes would start higher than 1,000, but they start at $1,000 for all of the entities: S corps, C corps, partnerships. So if you have a partnership and you also have a personal return, $1,000 for the partnership or the S corp, and then you would also pay the fee for your personal return. Because they're starting rates, because everybody's situation is different, what we do is we look at what you gave us and then we give you an invoice before we start work. Once we start work, your deposit gets applied towards your total invoice. So it's not a combination of offers. You're just paying a deposit so that we can get your work together and organize and speak and even communicate with you your setup in our portals and all of those things. Do we have any more questions about any of the offers that I made? We'll send out some more emails to give you any of the questions that we didn't answer. We'll send out some more emails, but I am taking the Profit Protector down on Friday, so it's only available until Friday. And the reason for that is because it's tax season. The same reason why we're only holding so many tax strategy calls, because it is tax season and we like to be able to spend as much time with our clients as we need to, so that we can get them everything that we need, the attention that they deserve. So that's why things are set up the way that they're set up, because it's important to us. Like, while we love new business, our existing clients are very important to us. So we want to make sure that we're able to spend the time with them that we need to spend with them. So if you know you need the Profit Protector because you ain't got no books, go ahead and sign up for the Profit Protector. And if you sign up for it, we will give you the instructions to have your books set up. And if you know you got books, but the books are not well, and you are unsure of them, and you know that your books are not really reliable, and this is what your tax return is being done on, sign up for the Profit Protector. YouTube University is not going to cut it, especially in this new year. If you're going higher, if you're staying where you are, then that might be fine. But if you know you're going higher and you know you're trying to expand and you need to get bank loans and you want to buy vehicles and buildings and all these things, you know you need to have this paperwork together. You know you need to have banking. Um, are the fees you gave for checking? No, the fees, um, the fees I gave are for preparing your tax returns. If you would like to have your tax returns reviewed, you can sign up for um, a tax strategy session, and you can bring your returns with you, by securely uploading them to us, and we can look at them together on that call. Okay. And then if it's determined that your returns need to be amended, then we can go from there. So I need some help, ladies and gentlemen. If you found this information useful, I need you to please write it in the comments. I need you to please tell me what you took away, anything that you didn't know before. I really need this because I need to put this information on our marketing materials. And I need to ask for this because my coach made me promise that I would ask for this. So if anything that I said helped you, blessed you in any way, putting you in better position for tax season, helping you to understand better or be more equipped, I would sincerely appreciate it if you would write to that fact on either, for the people watching on Facebook and YouTube, if you would comment on those videos, and for the people watching on Zoom, if you would comment in the Zoom chat, it would be greatly appreciated. But y'all, my witnesses, I did ask. So again, all of the content that I share with you, it all comes from childcare business owners just like you. All of the examples, all of the lessons, all of the questions tonight came from childcare business owners just like you. The Childcare Profit Protector came from childcare business owners just like you. These are the things that they asked us for. So we decided to compile all of this information together and package up all of the services together. We decided to package up and give it to you. So for those wanting to have their taxes prepared, it's actually not an email. We're having an information session tomorrow night at I'm sorry, Thursday night. We're having an information session Thursday night at 7 o'clock Eastern. So we're actually going to talk to you to make sure that we're getting all of your questions answered so that you don't get stuck. I don't want you, I think about back in the day when we did all of our appointments in person. And I don't want you to show up to the appointment thinking you're going to have your taxes done, upload your information, and then we go back and forth, back and forth. I need this, I need that. No, because all that does is make me have to send another invoice. I don't want to send another invoice. I don't want you to get another invoice. I want to do it right the first time. So I want to make sure you are properly informed and educated as to what we need so that we can get the best result for your business. So that's why this year we decided to just have an information session. And Alicia, if it's just you and me there, it's just you and me there. But we're going to make sure we get you all the way together. Okay? And I will give you our email address, but you have to allow 3 business days for a response to your email because we have to prioritize the emails from our child care protector purchasers and for our tax strategy people and our existing clients. But we will get back to you. We actually answer every single email that comes in, and that is our business email. That is not our marketing email. That is our direct email to our team. Thank you so much. I really appreciate all the kind words that you are putting in the comments. I need to collect them. So I'll continue to do these trainings as long as these trainings are useful and beneficial and helpful to you. So I know what is helpful based on your feedback of what you tell me is helpful. And then I know to do more of that. But if I don't know, then I don't know. So then I let you good people have your evenings in peace without hearing me talk for 2 hours. So I think that pretty much wraps it up. If there are no more questions and if all hearts and minds are clear, we will be sending the video out, a link to the recording, and the recording will go away in 48 hours. Our offers will also go away in 48 hours as well, meaning that the price for Child Care Profit Protector is going to go up to its regular $3,500 price. And the tax strategy sessions, we just will probably take them off the table because we'll be knee deep into serving our new clients. So thank you so much. We appreciate you, and I will see you all soon. Bye-bye.